All right, नया साल नई शुरुआत, and this Diwali is a Diwali to remember. From a dark Diwali last year, the vibe, the mood, the excitement, the wealth effect, the view on the economy, the victory on the medical front, this is a Diwali indeed to remember. But what about the coming year? If bulls are back, are they here to stay? And will the market pretty much follow a linear trend, or after a great bing bang solid year, we could be in for a choppy, volatile and a relatively subdued year? Let's discuss all that and much more with Raamdeo Agrawal of Motilal Oswal Financial Services. Raamdev ji, good morning. Wish you, your team, your entire family a wonderful Diwali ahead on behalf of Team Eaton. Okay, I think he's just settling down. Maybe the audio is not ready. I'll wait for my director to confirm me before I can go to him. Meanwhile, okay. Raamdev ji, happy Diwali. Good morning. Can you hear us?
Yes, Nikon. Very happy Diwali to you. Is it recording?
You know, if you were wearing a green color kurta, I would have said you are batting for the Bulls. If you're wearing a red color kurta, I would have said that you feel valuations are stretched. Orange means that you are divided in between. But the blue color kurta does not let me decide that what you think the market color would be for this coming year.
This is closest to the green, I would say.
But after a solid year, a year of re-rating, a year of solid price action, a year of solid earnings comeback and recovery, what is in store for us? Do you think, bulls are back, but are they here to stay?
Nikon, we have started?
Yes, you're on air already. So my question to you is that bulls are back, but are they here to stay?
Yeah, good morning. Yeah, actually, not only bulls are back, I think many more bulls are coming in. I mean, that's the biggest change this time. It's not the same number of bulls who are going to play in the market. In 2007, there were just about 10 million bulls. In 2012-13, there were 20 million. By 2021, there are 70 million bulls. I'm talking about the Indian bulls. And my sense is that in next 3 years, it will go to anywhere between 150 to 200 million bulls. So you can decide how big is going to be the bull run here.
Okay. Bull runs ultimately are a reflection of economy which gets captured in earnings. So while earnings recovery and earnings trajectory is headed in the right direction, the concern, which I think is obvious concern, is that A, valuations are trading at way above the historical averages, and B, if the inflationary environment comes back and if interest rates they go higher, the way you value stocks, it will start coming down.
Yeah, because it is quite possible that after a big run, we may have a consolidation or maybe some correction for some time. It's not necessary that from one Diwali to other Diwali you made 50%. So next Diwali has to be another 20-25%. That's not granted. Maybe it is flat, maybe it is a little lower. There's so much of we will incrementally go to the real economy. And that virtuous circle, from secondary market to from the stock market to the real economy, and real economy to demand revival and things like that. So yes, it can take a breather, and that will be very good. Actually, if it takes a breather, it is very good when other people have also come and the corporates have got the money what they should get. In fact, some people are getting more than what they should get. Valuations are quite stretched. So let the market stop here in terms of run, and let the primary market take what they can take, and let the valuation also there become reasonable. Let the earnings also catch up. So yes, but the bull run is not about 6 months, 12 months, 18 months. I think it can last for 3, 4. My sense is this run is going to be a much longer run. If we don't go too high too quickly, then this run has steam for a much longer run.
So from here, Raamdeo ji, for not next year, but next 2 to 3 years, let's divide the market in 3 pockets. Where do you think markets are likely to give low returns? Where do you think markets are likely to give no returns or negative returns? And which end of the market do you think is still capable of giving parabolic returns?
It is very difficult to, it depends on a lot of external factors, as things happen. Like, say, one of the places where I think still economy has to recover and the entire financial sector, there I think the slowing economy and the COVID had given a, kind of fatal blow to their books. And I think all the books are clean, all provided for, and new economy, new credit cycle, new credit, no, new, kind of reduction in the bad cycle. That's also going to start. So my sense is that entire financial sector, whether it is NBFC, whether it is bank, whether it is even insurance companies, all the intermediaries, I think they are going to have much better time in next 2 3 years. And in any case, we have seen IT and other sectors also doing very well. So I think it is going to be a good mix. I mean, as the economy recovers, what is going to be the like if see in last 8 10 years, real estate has not been participating after 2008. So now real estate is a new cycle. Now what real estate will do, low interest rate and massive liquidity, what it will do to the real estate, and in turn, what real estate will do to the constituent companies like say tile companies, cement companies, steel company, contracting companies. So I think it is going to spread out. So we have to buy reasonably good company at a reasonable price. So great company at reasonable price. That's the whole idea. And it is very difficult to chart out in next 3 4 years. And then what is going to be the government policies? Where exactly government is going to be even comfortable, where because we have seen a lot of disruptions in last 5 6 years. But if there is another disruption coming in from the government side in next 2 3 years, then the story could be very different. But otherwise, I think in natural course, economy will recover.
Wish you and your entire team a very happy Diwali. Aisha as well joining in.
Yes, Aisha. Very happy Diwali to you.
Okay. Raamdeo, just wanted to understand where would you put the entire PSU pack? Is it going to be a pool which is going to give you parabolic returns? Is it a pool which is going to give you low return or no returns? Especially given the government's conviction after Air India privatization and many others now in the pipeline. And more importantly, just the observation the other day with IRCTC, how quickly the divestment secretary actually corrected that convenience fee faux pas that they made. In less than 12 hours, the decision was rolled back.
Yes, that's the positive aspect of that entire incident. But that commitment to bring excellence in all the operations of fields. I mean, they are wonderful companies, mostly monopolistic or duopolistic. They have they are dominant player in the economy, so their underlying value is very high. If there is a bit of entrepreneurship and hands-off approach to these companies, so I would be surprised if it doesn't give at least a market return. The PSUs as a basket, which should give at least a market return. I don't think it will underperform the way it has underperformed last 10 years. So, and there is a good chance that it might even outperform because the valuations have been completely pessimistic even till date. So, as the economy recovers, because they are mostly not export oriented, they are proxies to the Indian economy. My sense is that they will do well, and if policy remains encouraging and there is no interference in their affairs, I'm quite sure there eventually some optimism will come in their counters, and little bit of re-rating from 7 8 P multiple to even 9 10 can take care of their market performance or even a bit of outperformance.
Sure. Raamdeo, the other thing I want to talk about is telecom. Given that you've observed, Bharti, for instance, for a long time, how is it that you are now sussing out the industry dynamics and whether or not Bharti will be able to brave out the might that Jio brings with it?
Yeah, so See, there are only two, three players, and yet the industry is struggling to barely break even in the sense that they break even, but I mean, I think if you add up all three, so I think there is barely any profit on the table. So that's a very sad part of it. This is one of the largest data consuming country in the world. Actually, I think we are the by far the largest, or maybe number two in the world, and yet we don't make money. So everybody is hopeful that someday it will make money, and so it's a current valuations are based on price to hope rather than the reality. So, but that hope is well placed, and I'm sure in next 24 months or something, we'll see a much better prospect than what we have seen in last 2 3 years.
I'm just scanning through the market right now, and you got comeback which is really visible in autos. You got comeback which is really visible in a lot of other, FMCG names as well. Mr. Agrawal, in next 1 year, this entire supply chain or the shortage which has happened because of logistics, hopefully that will get sorted out, and that will change a lot of, that will change a lot of things. Availability of raw material, pricing of raw material, shortage of semiconductor hopefully will get sorted. Today, what looks like a problem may not be a permanent problem same time next year. But markets will start factoring in and they will start normalizing it way before it actually happens. So what is the best way to play on that theme, normalization of the supply chain?
So I don't have great fix on this normalization of supply chain. I mean, whether it takes a year or two, nobody knows. Authorities are trying. Things in some cases things are becoming better also. But if by chance it gets prolonged, a lot of see the guy who's benefiting out of the supply chain problem, he doesn't want that problem to be sorted out. So I think it can get prolonged and it can really impair some of the companies. So I think one of the things is that you can twist the portfolio between services and manufacturing. So you can be a little underweight on the manufacturing and overweight on the services. That's one strategy. Second is the companies in manufacturing which doesn't have much of a global logistics, inward or outward. Those companies you can look at it, but that's very tough. I mean, you don't know which raw material, level 2, level 3 raw material is coming from abroad and how the linkage is getting set. So I think manufacturing companies will have tough time, at least in terms of profits, till it gets sorted out.
Autos, a space where you have a very deep understanding and it is also a very large part of your portfolio. Now, autos is one sector where the trouble actually was there in the pre-COVID time also. Slowdown of 2019 and a disaster of 2020 and a shortage in 2021. Is auto a pocket where you think one should be a contra buyer, or should one be worried about the disruption called EV?
I mean, of course, one has to be aware of challenge from the EV because it is no more a lab issue in the sense that now it is clearly there in the forefront. The EVs are there. I mean, now, and everybody is pledging that by 2025, 2030, significant portion of the production, one or two innovations, and on the battery side, and it will become much more serious challenge to the IC companies. But right now, I think in India, the penetration is a big issue in the sense that we don't have enough cars and motorcycles on the road, and demand is very high. I don't think guys are going to wait for EVs to come. And EVs had its own challenges in terms of mass customization. But right now, the issue is that the supply challenge from at least the car side. Two-wheeler, I think, bottom of the pyramid is still suffering, so they have demand issue. So, I mean, that is what really, baffles me at times, that when we talk about a strong economy, the bottom of the pyramid, that is basically represented by two-wheeler consumers, that's not doing well. And that's very, I mean, one has to ask question, why is it so? Why the bottom of the pyramid is not doing well, and what policy intervention is needed to bring them back to the consumption table. So, but then I think auto remains a very great opportunity. The post all these problems, they will come back because there's going to be pent up demand. And as the economy builds, gets strength, and consumers come out, I think there will be, there cannot, if there is a jobs growth, it is not possible that you not buy your motorcycles and cars and whatever is needed. So I remain bullish on the demand prospects in the medium term, just that I have no clue when this uh, what do you call microprocessor issues are sorted out.
I'm going to spend some time today with you, Mr. Agrawal, trying to understand that what should be the best way to participate in the financial space. Now, I completely understand that PSU banks were cheap and they have cleaned up their books and they are getting re-rated after years and years of underperformance. That's one thought in the market, and it's a very valid thought. But the other end of the market is excited about disruption which fintech companies are doing. The review in the market is that technology will change the way how the financial services as a sector would move. So what is the right way? Because currently you have two very diverse views in the market. One view which is supporting the comeback in PSU banks, and one view which is favoring and tilted towards technology and fintechs.
Yeah. So I think see fintech is niche, typically in unsecured lending and mass lending, 5,000, 10,000, 1 lakh, buy today, pay tomorrow, or buy now, pay later. There are basically it is unsecured. When you talk about fintech, they're not doing secured stuff. They are doing basically unsecured, because on the moment you talk about security, you have to go on the ground and becomes non-digital. And taking care of the collateral is non-digital process mostly. So that's a one small segment. So I don't think the mainstream banking is yet threatened by fintech companies broadly. So in mainstream banking, there is a public sector, there is a private sector. So clearly, in next 2-3 years, when the economy recovers, the credit cycle changes, the credit cycle comes back, and credit cost cycle goes in reverse. I think public sector banks will also do well, but they are a trade in the sense that they are good till this recovery process is complete. In the sense that maybe next 2 years, 3 years, that's the period when their credit cost is lowest, they will show the highest profit. But after that, they will continuously keep losing the market share to private sector banks. So, but then private sector banks are not as cheap as the public sector banks right now. So if I want to buy for 10 years and buy and hold kind of thing, I would rather buy private sector. And at the margin, some public sector banks like the big ones, one can put and have some, rapid recovery in their prices, because they are trading at one book or below one book. And then after that, real finance sector game is going to be private sector banks. And that too, some of the newer private sector banks, where a book is very small, say 20,000, 20, 30, 40,000 crores, and they can grow at a rapid pace in a given opportunity.
Raamdeo, as a traditional investor such as yours, do you worry about the kind of valuation some of these IPOs are coming in at?
I think earlier, there is so much of rush about the IPOs. Earlier we never used to bother about IPO, and actually they were much more reasonable at that point of time. Today, there is a rush of IPO, and they are not reasonably priced. So I don't know how to negotiate. And some of them are very good companies. Actually, it is a great time to meet all the managements and understand them, so that at some point of time, whenever the valuations, you understand valuation rather than, I would say, reasonable. I think that would be a great time to participate. But I think in general, the IPO prices are very demanding. I think they are higher than the secondary market. Equivalent companies in secondary markets are cheaper.
So have you not subscribed to any of these mega IPOs and the companies?
No, it's not, see, there's nothing like don't subscribe or anything like that. We don't have any strong feeling against any company. But what happens is that appetite which comes when you hear a new story and price is undiscovered, low, that's not the kind of a situation. So one of the things is that digital companies, whether local or global, they are coming into the markets, and they are not, thanks to SEBI, allowing them to come to the markets without, even if they're not making profit. That has actually opened a lot of companies coming into the market despite they're not making profits. So this is a great time to know these companies and build a small portfolio where you allocate 1%, 1.5%, and you see whether they are able to scale up. I'm quite sure the return on this portfolio, this portion of allocation, will be quite low compared to rest of the portfolio. But still, if you don't invest now, you'll never learn. So you are always remain empty these companies, which I don't think is the right thing. I think in the next 5-7 years, these digital companies they will explode. They will scale up. Once we are successful, they will scale up like at crazy pace, and hence their space will be much bigger. Now, which are those companies going to be, and how fast they will grow, that nobody knows. So we are just booking our space in few of these companies, but we are very cautious in terms of what we buy.
Good to hear that. Raamdeo, unfortunately, Nikunj and I will be in studios for the Muhurat trading session in the evening tomorrow. But how are you planning to celebrate your Diwali, given such a dhamakedar year it has been for markets?
So stock market, stock exchanges have already set the tone. They have a fantastic Muhurat trading tomorrow, 6:30, 7:30. We'll be there in office. We'll do a small puja and talk to all the friends.
Okay, great. Enjoy your day, and once again, wish you a very healthy and prosperous year ahead.
Thanks. Thanks, Aisha.